Alright, hi guys, welcome back to PKFX YouTube trading channel. So this is a very quick trade update that I would like to document. Basically, I took two trades for this week and both of it actually hit my stop loss, and I just want to document what exactly happened, what was the thought process behind it, and unfortunately it hit stop loss. And what am I doing right now? And I'm currently on another trade as well, so I just want to highlight the reason behind those trades. So first trade that I actually lost was GBPCAD. So GBPCAD, I saw the market made a pullback. The daily EMA held as a resistance, and the following day, the market had a pushback, and it closed slightly below the area where I was interested in selling. Right, as you can see in this arrow over here, my expectation was the market to make the pullback, which it eventually did, and then this area to hold as a resistance, because I saw this many candles for the past few days that was pretty much respecting this area clearly. So I was expecting this zone to act as a resistance, which it was actually showing that it was acting as a resistance as well, and hence I entered this trade. But unfortunately, I just got wicked out. In fact, I don't think this will be a wick out. Most probably, it's going to rally upwards. If it wicks out, then it's pretty sad. We don't want to get wicked out, right? So market has been wicking me out quite a bit for this week. So when I entered this particular trade, right, I saw this high point over here, this high, let me zoom in, this weak point over here. So I decided to give ample of space for the stop loss as a breathing room above this weak point. And as you can see, upon entry, when the market was down here and I decided to enter, the market actually rejected this area thereafter and went all the way pretty much close equally to the weak point. So this is actually one good lesson learned. I mean, obviously, eventually I got wicked out anyway, but a good rule of thumb is to always have a few pips above this last candle closure, which is the highest, and the weak point, and you put a 5, 10, 15 pips above. In this case, I gave about 5 pips only because it was already 71.3 pips, which is pretty a lot. I would say reasonable, sufficient amount of stop loss. There's no reason to increase the stop loss any further. So I'm willing to take this loss, no problem at all. If I go to the daily as well, it is above the daily EMA. The stop loss was above the daily EMA. It was above the 4-hour EMA sufficiently. The only thing that I see that could have been a potential lesson learned in the future is when I entered this trade, if I go to the 30 minutes candlestick, right, upon this break over here is when I entered the trade. But if I were to really zoom in, the market did close the 30 minutes candlestick right below this area, which indicated that, hey, you can now go ahead and enter. But the only catch here is this is in the 30 minutes candlestick where the EMA now has already turned into a resistance instead of a support, which is good. And this was a clear shift of structure, right? This was the previous higher high, this was the previous higher low, and the market broke with this candle. Very clear shift of structure, which is a good entry point. But when I go to the 1-hour candlestick, I believe this was the issue. The 1-hour candlestick did not close yet. And at that point of time, the 1-hour candlestick, when the 30 minutes candlestick closed, the 1-hour candlestick was still here, where the 1-hour EMA was coming in as a support. And eventually, by the time the next 30 minutes candle opened, the market reversed and it actually closed above over here. If I go to the 30 minutes candlestick, we can clearly see that the next candle literally rallied up. And thereafter, it broke the structure back again from a sell into a buy. So if I were to have another opportunity here, I should have waited for the 1-hour candlestick. If this trade were to be reversed back again, and if I were to do something different, that is what I would have done. I would have waited for the 1-hour candle to also close to confirm to me that, hey, I am breaking the EMA as well. It's good to go. It's good to go to fly. Maybe I would have missed out a few pips, something like this, right? But I could have adjusted the stop loss as well to match the 1 to 2 risk to reward. But however, this trade has already played out, and as you can see, because the 1-hour technically didn't break below, it eventually changed the direction, shifted back into a buy, and then the market was pretty much ranging, but it never really came to my buy point, right? Eventually, this area held as a support, right? What was supposed to come here and turn into a resistance, right? actually broke above, made this into a support, and now started rallying upwards. So it's a loss taken. I'm okay with that. And I've documented this accordingly as well. And I mentioned clearly over here in the journal that the trade reason, the weekly, daily, the 4 hour, all was sell. So all the high time frame was a sell. I'm going for a sell, which is great, right? And then the weekly, daily, 4 hour EMA, all of it was acting as a resistance for me. So if I go back over here, if I go to the weekly, right, you can see that the weekly at the point of entry was acting as a resistance, the EMA. The daily was also acting as a resistance. The 4 hour was also acting as a resistance. So it's pretty much a very good trade that eventually hit stop loss, right? It can happen, right? So all of it acted as a resistance. The daily was also rejecting from a strong area of a previous structure point, right? And the 4 hour also had a head and shoulders retest neckline pattern. So if I go back to this 4 hour candlestick, you can see that this was the shoulder, head, shoulder, break below, retest the neckline, and was going down. So it eventually showed the hand first. The market literally showed its hand first, right? I could have just asked for a little bit more, but this is the tricky part, right? You don't know when exactly is the right time to enter. I believe that was the right time to enter, but eventually market pulled back. It broke below again, but eventually the market rallied upwards, right? So the market can always do whatever it wants. That's why I only reached 0.5% for this trade, so no hard feelings. So what I did is, what can go wrong? Did not wait for the lower time frame to break and close clearly below the area of interest, and entered without any shift of structure, has had strong confluence. In this case, for my strategy, it was almost 120% confluence, saying that, hey, everything is indicating sell, go for it, right? So I went for it, right? And right at the 1 hour EMA upon entry, which can act as a support. This is what I was explaining, right? So the 1 hour EMA indeed acted as a support and gave an upward momentum. Market ranged and did not really broke below the area or the zone where I thought it was going to act as a resistance. Ended up acting as a support, and eventually it hit my stop loss. So the loss taken, I could have at least waited for the 1 hour candlestick. I did not, so it is what it is. And this was one loss. Now moving on to the next trade was CADJPY. This is also unfortunately unfortunate, right? This particular trade as well, if I go to the 4 hour candlestick, I can clearly see that the market is slowly trending upwards. But I gave sufficient amount of pips, which I thought I gave sufficient amount of pips, like about 40 pips over here for the risk to reward. I could have pulled it slightly lower, but I thought, hey, the stop loss already below this zone over here, the box over here, below the round psychological number of 115,500, and below the 4 hour EMA as well. All this is going to act as a support. So in case market comes down, it's going to push back up, right? But what happened is I was taken out by this strong weak out, and then the market continued to just range at the side. Yeah, it did shift the 4 hour into a sell, but at that point of time when I got stop loss, right, hit, it was still a buy, and I literally got wicked out, right? And I noticed that the market for CADJPY from time to time has been giving this sort of sudden, strong weak outs, right? So you can imagine, like someone who would have seen this breakout and they'd be like, hey, this market has already broken out, candle has already closed as well, it's time to enter. And if they put their stop loss anywhere around this area, for sure they would have been taken out. Such a strong week and such a strong week. I believe these are the liquidity grabs that's happening, and I got liquidated as well for the same reason, right? So stop loss was hit, and then the market eventually rallied back up, and it turned back the 4 hour into a buy. And I was, to be honest, pretty disappointed with this, because it was a good trade with good confluences. The only catch here is, by right, I should wait for the market to break above and then come back from below and retest and continue to rally upwards. So I took the loss. I updated this trade accordingly as well. This was the next loss, CADJPY, where I clearly mentioned, despite setting the stop loss below the 4 hour EMA and below the area of interest, I still got wicked out. I take it as my mistake, as I had a 1 to 3.85 risk to reward. So this risk to reward was pretty high, 1 to 3.85. If I were to stretch out this stop loss to be something like this, I could still easily have a 1 to 3 risk to reward, right? So at that point of time when I placed it, to be very honest, I did not notice that the previous candles were giving this kind of strong wicks. I only focused on this area, I should have looked back. So this is one good lesson learned. Should have looked back at what was happening previously to give sufficient amount. I wouldn't have been wicked out all this while, right? But it's okay. I got wicked out, so I learned the lesson, right? Here it says that, I got wicked out. I take it as my mistake, as I had 1 to 3.85 risk to reward. I could have made it as 1 to 2 risk to reward, increasing the stop loss significantly and not get wicked out, right? So the lesson learned: do not buy inside the area if it's growing from below and haven't broken the area, because technically this can be considered as buying into resistance. So what I'm trying to say to myself is, if I go to the daily candlestick, it's easier to see these areas, these boxes that I'm drawing, right? If it's coming from below and these boxes I'm expecting it to act as a resistance, then I'm buying into resistance, which is completely wrong. I should allow it to break above and then come back and retest below, making it into a support, then eventually rally up, right? So I understand that I'm taking the risk, and the reason I was taking the risk is because I do see a very gradual increase, right? And from time to time, the market is also liquidating any sellers as well. Buyers with tight stop loss as well, including myself. I just got wicked out, right? And also I saw the daily EMA also coming in as a support, right? This candle over here broke and then held clearly for the upcoming days as well. So I thought, okay, this is actually coming in as a support. Eventually it's going to break above, right? So it is a high risk trade. I wouldn't say no. But what I did is I updated this accordingly, and I said that, I'm considering this as buying into resistance until it clearly breaks above the area and then pulls back. If it does not pull back, then it was never your trade. Move on to the next trade, which is what I'm supposed to do. But I did re-enter the trade again over here for the same specific reason, but slightly differently. What I did is, thereafter, market had a significant dump over here, and then the market bounced back as well. And when I went to the 30 minutes candlestick, as I was observing, this was the 30 minutes highest point when the market shifted back again into a buy, right? All this while it was sell. And then eventually at this point of time, the market shifted into a buy. And it actually closed over here slightly above the EMA and started rallying above, right? So at this point of time, the market gave me a clear indication that, hey, the market is shifting back again. And the best part is you are entering slightly lower than the previous trade. Every trade has no relation to the previous trade, that is for sure. But I do understand that I'm getting a better buy point, which means I can increase the stop loss, even though the risk to reward is even better than this, this is 1 to 3.85, but this trade is 1 to 4.14. And what I did is I simply gave the same 40 pips, but the difference here is it was about 5 pips plus minus more than this particular last week that just happened, right? And I understand that the market, eventually if I go to the 4-hour candlestick, can clearly see that the market from time to time is wicking people out, and the wick just happened. So this is now again like a gamble, right? If the market were to wick me out again, probably it's traveling all the way up here, right? If it goes in my favor, eventually it will have another wick, but eventually it's going to keep moving upwards and doing the same thing. This is my expectation. Therefore, I said that, hey, this loss was not really a loss because I got wicked out. So I'm entering back again. However, I'm not risking a big amount. I'm only risking the same 0.5%. But if I lost here again, that's it. I'm done trading for the day, right? Because I already took one loss in GBPCAD, another loss in CADJPY. If this trade ends up as a winner, this winner will cover the 2 trades. But if this trade also ends up as a loser, 3 losses in a week, I'm done trading for the week. So that was the reason for this. And this particular trade, currently, I will say this is the higher high. So the 30 minutes has already shifted. This is the higher high, right, for the 30 minutes candlestick. And if I were to draw the lower low, this is pretty much the lower low. So the market is technically in an uptrend right now, and all this is pretty much ranging. If the market breaks above this 30 minutes candle, right, we have a good opportunity here for the market to continue to rally. But if the market breaks below this 30 minutes candlestick over here, then most probably it's going to hit our stop loss. So the trade has been placed and the risk has been taken, only 0.5%. Let's see how this turns up. And I've also documented this accordingly as well, understanding that this is pretty much a reputation trade. So I mentioned here clearly as well, the trade reasons and everything. I'm not going to go through everything. I already explained by wordings. Basically, I got wicked out, so I'm entering back again with the stop loss placed about 5 to 6 pips below the previous wick out point. So I shouldn't get wicked out again. So that's about it, guys. This trade is still going on, and I'll keep you guys posted. Thank you so much for your time, and have a good day. Good luck.